Welcome back to Question Time at Alhambra Investments. We have got just a load of things to talk about. And so, what we've chosen today is to talk about, oh my gosh, the end of commercial real estate. I just am pulling out what's left of my hair. So, apparently, Joe, you've already done that. So, what do you
Yeah,
think about the apocalypse, the Armageddon here?
I did that about 30 years ago, man.
Real estate's been that bad that long, huh?
Yeah. I started losing my hair in college, so it's really been a long time.
Hey, pull your
Well,
microphone close to you a little bit, please.
I'll do that. Sorry about that.
That's all right.
I forget about these things. I'm not a media guy like you. Okay, so commercial real estate. Now, I find this fascinating. Absolutely fascinating. So let's go back. March of last year, Silicon Valley Bank fails. March of 2023, right? Why did it fail? Well, it wasn't because of commercial real estate, but that's kind of what really kicked this conversation off about commercial real estate's going to be in big trouble because it was a bank failure. And everybody said, well, all these regional banks have all this commercial real estate exposure. They're just going to get clobbered. And so why did Silicon Valley Bank fail? I guess let's go over that first. Interest rates go up. They had a big portfolio of treasury bonds, longer dated treasury bonds, and those go down in value when interest rates go up. And they got themselves caught in a situation where they had a big unrealized loss on their balance sheet, and people started to bail. Depositors started to leave. And then there was some kind of rumor out there, Silicon Valley. I don't know, Steve probably knows more about this than we do, but apparently everybody in Silicon Valley, all the VCs and everybody yanked their money out of Silicon Valley Bank and it failed. And then you had a few more failures along the way over the next couple of, like, I guess next month or so, whatever it was. So that was the point where everybody started really fretting about these regional banks and how commercial real estate was just going to be a disaster. And we were going to we're bank failures everywhere, man. Well, I will say we have in our portfolios and have had for a long time, we've had a large allocation to real estate. And we took, I won't say I took a lot of heat because every client, a lot of clients, not everybody, a lot of clients were like, hey, why do you own this thing? Why do you own this real estate stuff? Don't you know that commercial real estate is going to come to an end? Well, as I pointed out at the time, publicly traded real estate is not the real estate market. Okay. Publicly traded real estate, the public Dow Jones REIT index has like 5% in office buildings. So it's not the same thing. But in general, higher rates are not great for the value of real estate because it works off cap rate, which kind of works like a bond. It works in the inverse. So as rates go up, cap rates go up, and that means the value of the building goes down. So here's the thing, though. We haven't seen any big failures, right? We haven't seen any bank failures. We haven't seen any big problems with commercial real estate. Now, that doesn't mean, by the way, that you don't read articles that say, hey, this building, they gave back this note, they gave it back to the bank. Or somebody bought a building at a huge discount because the current guy was underwater. But I got news for you. Just because it wasn't in the news doesn't mean this doesn't happen all the time, and it does. Okay, maybe there's some a little bit more going on over the last year, but really nothing significant that shows up in the data, put it that way. There's no big defaults out there. There's just not doesn't exist. And so no, we haven't seen a problem. Now here's the kicker. And this is why I find this so fascinating. The thing that everybody's worrying about, the thing that everybody is panicked about, everything, the thing that everybody's afraid of. Remember what Warren Buffett said. You want to be greedy when everybody else is fearful and fearful when everybody else is greedy. So we didn't give up on our real estate position because we didn't think there was going to be a big problem, and there wasn't. Dow Jones REIT Index is up 25% since March of, or actually since April 1st of 2023. So when you get really worried about something, what you ought to be doing is thinking about maybe I ought to be buying some. Doesn't work all the time. You can't be a contrarian for contrarian's sake. Sometimes there bad things do happen. But in general, the thing that everybody's afraid of, don't worry about it. That's not the thing to worry about.
Steve, what do you think? You are in Silicon Valley.
Yeah, well, I'm going to go a little bit more broader nationally, but I'll hit San Francisco a little bit here. Um, I totally agree with Joe. And a reason for that is take a look at who's giving you information and why they're giving information. So in real estate, there's been winners and losers, but there's a saying in the media, if it bleeds, it leads. So we got the bad stuff. The losers covered an awful lot and not a lot of attention given to the winners. And there were a few losers. Rates went up and there was some badly structured multifam deals with adjustable interest rates. And even if the property was viable, the financial model failed, and some of that was happening. Uh, in retail, the traditional shopping mall is pretty much dead, but retail is actually doing really well, and there's been some new trends emerging there. But the big one that got all the headlines was the headline of remote work has come. Everybody's working from home now, and the office sector is dead. Well, again, it was a great headline and a lot of people read it. But if you actually start digging into the data, you found that they were really talking about the large corporations. And with the large corporations, yeah, there was a trend towards hybrid work, really, where they were spending less time in the office. And then, but then they were kind of covering selectively a few places like San Francisco, and downtown San Francisco really has been a commercial real estate disaster, but a few downtowns isn't the entire market, the entire sector, and so on. And really, when you kind of looked at those areas, what you found was it wasn't so much remote work or COVID or any of this stuff. It was, in my opinion, bad public policy. And you even had, I think in Chicago, the CEO, I think it was Citadel, basically said, "Hey, it affects my ability to retain employees when I have to worry about them getting mugged. I'm going to Miami." Well, they didn't cover people moving to different locations or moving to the suburbs. Like Joe said, they just covered the shutdowns. And then people read these articles and see this news that all of commercial real estate is dying because they're plastering on the few downtowns that are really struggling with some office property. And then even in office, there's different segments. Like New York, the top tier was doing a lot better than the medium tier, which for reasons had issues. But they very selectively cover it to make it look like an apocalypse, make it look like a bloodbath. And then the people who sold on that and sold all of commercial real estate or moved away from the sector, they missed some really good upside and some returns. So just giving it a
Yeah.
little bit more color there, but you really should, consider that what's the incentive of the person providing you information? In the case of the media, a lot of times it isn't to inform you, it's to get clicks.
Yeah, there's no doubt about that. Look at, I do wonder. Listen, it's interesting. It's very regional, right? I live in the South. I'm in South Carolina, and I can tell you for a fact, everybody went back to work, 2 years ago. As soon as there was ability to get people back in the office, they went back to work, man. There was no sitting at home. And I think that was true of most of the South and the Midwest. Obviously, there's some exceptions like Chicago, maybe. But again, like you said, Chicago has got its own set of problems, man. New York, too, by the way, S.L. Green's the big landlord in New York. And right when all this stuff was happening, what did they do? They went out and raised a new fund. They were like, we're going to buy into this. And that's exactly what they did. And you knew that these are the smart guys. They're not, these guys have been in New York real estate for decades. They know what they're doing. And yeah, okay, might have been some problems in Midtown, but you know what? That's when you got to be a buyer. This is what makes investing really hard, guys. Everybody says, oh, buy low, sell high. It's easy. It's not. When it's really low, that means that things are awful. And you got to be a buyer when things are awful. You got to look ahead to the better times. And it works both ways. It's really hard to sell when things are still going up. I'll give you an example. Look, everybody and his brother is excited about gold right now. And you know what we're doing? We're trimming a little bit. Why? Because there's no fundamental reason for it to be doing what it's doing. But that's a minor example. It's not like we're selling all of our gold. We always have an allocation to gold, but we're trimming some because it went up so much. It went up so much, it's out of balance in our portfolios now. And that's not true of every client. Depends on when you came in as to whether you're getting rebalanced on that stuff. If you've been with us a long time, you've had gold for a long time, you're probably seeing a little bit of sales. But anyway, this commercial real estate, work from home. We just got news last week, man. Andy, what's his name? Jassy at Amazon. Yeah, he said, come on back to office because you don't get to do this anymore. Now, look, for some of these companies, I think that's kind of a stealth way of doing a layoff. It's like, hey, we don't really need all these people. And the ones that don't want to come back to the office, they're not the ones we want. We'll let them go. We have no problem with that. So will Amazon lose some employees because of that? Maybe. I suspect they won't lose any that they'll miss. I like I said, contrarianism is hard. But it does work, man. It's what you have to do. And by the way, Steve, San Francisco's downtown seems to be reviving a little bit with some of this AI stuff. Is that right?
Yeah, the idea, well, and that kind of goes back to San Francisco being a unique situation. It had a lot of disproportionate venture to the offices, and
Yeah,
it's in, when it's very easy if a venturist wants to, cut costs to be like, get out of downtown San Francisco, stop paying that square footage and relocate somewhere. And in venture sometimes it is more volatile, so it has more ups and downs. So yeah, that has helped some. San Francisco still has a lot of problems, and one of the issues too is you can be elsewhere. I mean, in the valley, I remember there was one point where San Francisco put up some of its worst numbers, and Santa Clara and some of the other counties put up some of their best numbers. And,
yeah.
and that was really easy to be like, they moved a few miles. It wasn't like they just disappeared. They moved into the peninsula and stuff like that. So, um,
They may have
yeah,
moved
and,
for good
and
reasons, though. I mean, it's not like they didn't just up and move out of for nothing.
no, you
Either
really,
prime downtown, or it was like you said, they're burning too cash too fast or something like that. There's always a reason.
yeah, and you really do legit. They've got some public policy issues in the valley. If you're in San Francisco, you gotta worry about your car get broken on too, and
Yeah,
you don't have to in most of the valley. And
yeah,
maybe you just don't want to deal with that. You don't want to spend that. And then there's another issue here that's a national one. Millennials are getting older. They're getting to the age of house formation. And as people get older, downtowns that are kind of hot and happening become a little less attractive when you want to start a family, a little bit of a bigger place, maybe a yard, someplace you can raise your kids. So there was always going to be a move into the suburbs that we're seeing right now. I think COVID just accelerated some trends that were always, I mean, like, hybrid work or working out, that was always going to happen. But having us all locked in our houses and having to be on Zoom calls and, order food and stuff like that, I think it just accelerated stuff, and then it becomes a story that's very easy for the media to sensationalize.
yeah. No, I'll throw in some Southern stuff here since I'm in the South. Bob will get this. I call that the Hank Williams Jr. effect when people move out of downtown. That's because of all my rowdy friends have settled down.
Yep.
You got to go out and start a family. You got to put away that whiskey and put away the stuff and stop partying a little too much.
Hey, I will give you another thing that everybody thought for sure was going to happen that looks like it didn't work out that way, just in terms of how you have to always look a little bit deeper. Everybody was kind of for sure that these baby boomers with these big houses were going to unload them, right? And now with what interest rates went, and then stuck in these low loans, plus kind of sentimentality of I lived here and I grew up. You're just not seeing those turnover in all those houses that everybody and was for you're going to have. And at the same time, you've seen more demand for bigger houses as people now are doing hybrid work and want a home office. So this segment that everybody for sure was going to have some troubles, people were trying to unload more of than they needed, and there were fewer buyers. All of a sudden, it's doing much better because all of the logic turned out, well, not all of it, but a lot of the logic turned out to be wrong. So it's just another incident where you hear the media or something say, "Hey, for sure this is going to happen." And sometimes you need to not take that at face value.
Well, let's let Bob weigh in here. Bob lives in Nashville. He's got Nashville's been kind of a boom town for the
Boomtown.
last, I don't know,
Yeah.
how long now. I
Nashville,
suspect there's not a lot of work from home going on there either.
it depends. I mean, we've got some huge towers being built downtown right now.
Yeah.
Amazon's building two towers. Others are coming in. They just announced last week that they're getting ready to build a building here that will double the size of the largest building, which in fact is that one right there. We call it the Batman building. That's
Mhm.
30 stories. This one's going to be 65 or 70.
Yeah. That's
So,
the point, right? So everybody talks about national statistics, right? National economic data, this aggregated data, but you got to get down into the details, man. That's where you find out what's really going on, man. It depends on what you're doing. Nashville, as opposed to say San Francisco, has good public policy. There's no, I don't believe there's a corporate income tax. There's certainly not a state income tax in Tennessee.
yep.
It has an impact, man, and people and companies want to live there. Although I hear some rumblings there, Bob, that Nashville is getting too crowded now. Is that true?
Oh, that's been the case for a long time.
I
So
hear you.
people are still coming. They're coming. They like the form of government. They like the no state income tax. It's just a great place to live.
Yeah.
So let's wrap it up here. I want to paraphrase something, Joe, that you said a while ago, because everybody, like you said, wants to buy low, sell high. And I don't know if it was Warren Buffett or if it was Sir John Templeton that paraphrased and said, you always buy when there's blood in the streets. And you just
That
have
was
to
a
be
Rothschild.
disciplined.
That was a Rothschild.
Okay.
What Templeton said, and Templeton had a great one too. And John Templeton was an incredible investor. This guy, when the crash hit in 29, Great Depression, he went out and bought a share of every stock on the exchange, every one of them. And his thing was, you got to buy at the point of maximum pessimism.
Yep.
I thought it was great, man. Great,
Yeah.
great line.
Well, thanks for joining us today. We'll be back tomorrow. So if you've got questions, please put them in the comments section down below, and we will do our best to answer them.